Welcome to today's What Will Move the Market show. I'm your host Prem. It's Friday, December 19th, 2025, and here is everything you need to know as the markets open for today. Let's start with what happened on Wall Street overnight. The mood was decidedly optimistic as the Dow Jones closed up 0.14% with a gain of 65 points, finishing at 47,972. The S&P 500 delivered stronger momentum, climbing 0.78% to close at 6,795. And the Nasdaq was the real outperformer, surging 0.91% higher. What drove this recovery after days of losses? A softer-than-expected consumer price index report, revealing inflation moderating. Tech stocks and semiconductor giants led the rebound, with Micron Technology providing strong guidance on demand substantially outpacing supply. But here's the critical story that will dominate Indian IT sentiment this morning. Accenture, the global IT services bellwether, reported its first quarter fiscal 2026 results yesterday, and the numbers paint a mixed picture that's already creating ripples across the sector. Accenture delivered new bookings of $20.9 billion, up 12% in US dollars and 10% in local currency. Revenue came in at $18.7 billion, up 6% in US dollars and 5% in local currency, at the top of the company's guided range. Advanced AI new bookings reached $2.2 billion, showing the sector's appetite for artificial intelligence solutions remains robust. On the surface, this looks strong. However, the company's full-year guidance tempered some enthusiasm. For fiscal 2026, Accenture now expects total revenue growth of just 2 to 5% in local currency, and excluding a 1% estimated impact from its struggling US federal business, it expects 3 to 6% growth. That federal business drag is critical. It signals policy uncertainty and potential spending slowdowns in the US government contracting space under the new administration. Accenture's adjusted operating margin guidance of 15.7 to 15.9% shows only 10 to 30 basis points of expansion, a modest figure that hints at margin pressure and potential wage inflation. This guidance reset is important because Accenture is seen as a bellwether for Indian IT companies. It reports earnings 2 to 3 weeks ahead of giants like Infosys and TCS, and investors use its metrics to forecast demand trends across the Indian sector. Now let's look at what this means for Indian investors watching those American depository receipts. Infosys ADR, the key proxy for India's IT sector, closed up 2.53%. This is expected to give all IT stocks in today a good leg up. HDFC Bank ADR closed down 0.5%. The takeaway for Indian IT investors is nuanced. While Accenture's strong AI bookings of $2.2 billion signal continued appetite for advanced tech services, the lower full-year revenue growth guidance and federal business headwinds suggest that Indian IT companies should brace for a moderating demand environment compared to prior years. This is a yellow flag, not a red one. Indian IT firms are leaner, more cost-competitive, and less exposed to the troubled US federal space than Accenture, which means they could outperform the broader guidance. But the rupee depreciation that we'll discuss in a moment becomes even more critical as a margin offset tool if client spending slows. Moving to the Asian markets and the critical gift Nifty level. Japan's Nikkei 225 opened with early momentum at 49,450, up 0.91% as traders positioned ahead of the Bank of Japan's decision, which is expected to announce a rate hike to 0.75% from the current 0.5%, the highest rate in 30 years. Hong Kong's Hang Seng is up 0.27%. And here's the most critical number for your day. Gift Nifty, our international indicator for how the Indian market will open, is trading at 25,926.50, up approximately 50 points from the previous session close. This signals a gap-up opening of around 50 points for the Nifty 50, a modest but constructive start to the day. On the geopolitical and macro front, there's a piece of crucial positive news for India's broader export story. India and Oman have officially signed their comprehensive economic partnership agreement yesterday. This FTA marks India's first bilateral trade agreement with Oman and opens zero-duty access on 98% of Oman's tariff lines for Indian gems, jewelry, textiles, and engineering goods. This is strategically important as Indian exporters look to diversify away from US and European markets amid tariff uncertainty under the Trump administration. The Bank of Japan's rate decision is due within hours. While a hike to 0.75% is almost certain, investors are watching for commentary on future tightening pace. A hawkish BOJ could strengthen the yen and provide headwinds for export-heavy stocks in Asia, but markets appear prepared. Back home, the domestic story revolves around rupee weakness and its dual impact on the IT sector. The Indian rupee has depreciated to an all-time low of approximately 90.83 against the US dollar, creating significant policy pressure on the RBI. For IT firms like Infosys, this depreciation is a structural tailwind that boosts margin expansion on dollar-denominated revenues. This is now even more critical given Accenture's guidance on moderating growth. If client spending softens, IT companies will lean on rupee depreciation to defend margins. Domestic institutional investors stepped in with 1,077 crores of buying, absorbing half the FII selling. Watch for FII flows closely today in the context of IT stocks. Any weakness in IT could reignite FII selling. Technical levels are crucial today. For the Nifty 50, support is around 25,750 to 25,800, aligned with the 50-day exponential moving average. Resistance sits at 25,900 to 26,000. Commodity markets present an interesting story this morning. Brent crude oil is trading at approximately $59.70 per barrel, down from previous levels, the biggest catalyst driving today's market sentiment. Gold is trading around $4,316 per ounce, holding sticky support despite equity rallies. Silver is around $65.50 per ounce, relatively stable. Here's the actionable setup for the day. We're seeing a classic bifurcated market at the open. The crude oil collapse below $60 remains your biggest macro tailwind for Indian markets, benefiting paints, tires, and consumer discretionary stocks. Infrastructure plays and select consumer staples should also perform well. However, IT stocks face a headwind from Accenture's muted guidance on revenue growth and federal business weakness. Yes, Accenture showed strong AI bookings, and Indian IT companies are better positioned on cost arbitrage. But the broad guidance of 2 to 5% growth is a reset from prior expectations, and that will weigh on sector sentiment. My tactical advice: avoid chasing IT stocks at the open, even if they gap up. Wait for consolidation and clear direction from Accenture's impact on peer valuations. Instead, focus on secular beneficiaries of low crude oil prices, consumer staples, paints, and infrastructure play strong hands. Oil marketing companies remain a sell due to inventory losses despite lower crude prices. And if you're thinking about IT as a longer-term position, remember that valuations have already cooled significantly, and the rupee weakness provides margin insurance. But today is not the day to load up aggressively. The Nifty has defended its 50-day moving average, which is bullish on structure. But sentiment is mixed, and respect that reality in your trading decisions. Stay tuned for the evening wrap and send in your questions and subscribe to this podcast to hear US every day. This is Prem signing off, and I'll see you at the closing bell. Thank you for listening to What Will Move the Market.